Mr. Paul Goranson. Welcome to my show.
Well, thank you for inviting me. I look forward to this. I'm glad we were able to set it up.
Thank you very much. I want to start, Paul, I want to start with your background and your prior roles in uranium companies. Can you give us a short introduction, please?
I'll do my best to keep it short. It's a 35-year career, but
it can be short, yeah.
Yeah. But I started in the business back in 1987 as an engineer and worked my way up through several different organizations, both with Uranium Resources, Inc. and then Wyoming Mining, and then to Slovenia Uranium, which is a private company that started up the Alta Mesa project, which we just acquired. Constructed that. Then I moved to Cameco to be the president of their U.S. operations. And from there to Uranium Energy, and then ended up as COO of Energy Fuels Inc. before I joined enCore as the CEO.
That's great. I'm a shareholder. I was a shareholder of all your prior companies, and I'm a shareholder of enCore today. So I'm following you, Paul.
Okay.
Yeah. Can you, let's start with uranium, banning uranium. Can you comment on banning uranium imports from Russia? How do you think that will be unfolding eventually?
Well, the ban is currently in form of legislation in the House and Senate.
Yes.
So they still have to they still have to be voted out to go onto the floor out of committee. But I do believe that what we've seen over the last I would say year and a half is increasing support as people understand, as the policymakers begin to understand the grip that Russia has on our nuclear fuel cycle and the need to free up our supply chains from that grip. And so it's becoming an easier story to sell. And right now, some of the pinch points in the conversation is, so without Russia, what do you do? And the other conversation is, how about if there's not enough capacity for utilities that need enriched uranium product, how about that? So those have been addressed in the current legislation, both in the House and Senate, by having that ability to do a waiver. And the waivers go away at the end of 2028, which aligns completely with the Russian suspension agreement and when the grandfather contracts expire. So it allows companies who can demonstrate they can't source uranium from any other source at all, and they can get a waiver and get it imported. But everybody else, all the other supply would have to be banned. And I think that as I see support, there's a good chance that bill could pass in this Congress both ways. And I suspect, and I expect, because it's going to have bipartisan sponsorship, that the president will end up signing it, because it does make sense to do it that way. Even though it's a small, relatively compared to other energy sources, the revenue that's going to Russia is going directly to Rosatom, which is part of the Russian government. And it's, as we all know, money's fungible and ends up in a lot of places. And so if we're sending billions of dollars to support Ukraine, then does it make sense to be sending even $1 billion annually to Russia?
Yeah. You recently came back from nuclear conference in Slovenia. How was there? What is the sentiment you see there?
I would say the sentiment from a uranium supplier, producer perspective is very positive. As you're all aware, in the past, and when we're in an oversupply situation, it was, you go to these conferences and generally you have meetings with utilities, and it's very much a one-way conversation, and that's shifted these days. So I would say, let me characterize a couple of things. One is the overall conference focused on supply chains and supply chain issues, and really identified that there is going to be a bifurcation of the uranium markets as Russia is excluded from Western supply, but also even Kazakh production, because of the difficulties of transportation outside of using Russian transport, remains a significant challenge. Kazakh supply coming into the Western world it creates some uncertainties, and that was discussed at length in there. And this is the conference is a very technical type of fuel conference, and so I would say that the conversations that I heard regularly within the presentations and from the utility perspective in particular is that their discussions have moved from price being the primary driver of purchasing uranium to security of supply. That's been a major shift that hasn't been there for quite some time, and I heard that statement made several times from several different people that security supply has taken precedence, and that was definitely evident there, and it was definitely evident in the individual meetings I had outside of the conference itself.
Okay, what do you think? How will Zuri Invest, the new vehicle on the market, have impact on the spot markets?
I think it's going to put pressure on the spot market, and just like spot did, but it has a different mechanism.
Yes.
And than spot did has, and so it's going to have an impact on it because it's going to create demand that wasn't there previously. Additional pressure on the spot market. We know that the spot market's very thin right now, and there's not a whole lot of mobile material at all available. So they're going to obviously put pressure on it to increase their demand, to increase that pricing in order to draw that supply to them. How much and how long lasting, it's really key on the mechanism, and I don't know all the details of Zuri Invest, and the way they can do redemptions and everything else. I think it's got some real good controls on it, but I would say I would not characterize myself as an expert on it.
Okay.
But I do know that they have an agreement with Curzon Uranium, and Curzon's has a good team there, so I think that they'll be successful, and time will tell if that type of mechanism that they've developed will turn out to be as significant as they hope it will. And I see no reason for it not to. It's just everything. If you recall, with Sprott and the Physical Uranium Trust, there was a belief that the price is going to keep going up and up and up. But they ran into the loop of the net asset value and being able to run their ATM. So all the doom and gloom I'm talking about from the buy side of basically Sprott consuming the entire market didn't come to fruition. There's still a factor. There's still a weighting factor, out there, but nonetheless, it was they were able. Their mechanism allowed them to actually moderate. And basically it showed that what Spot was doing did what it was supposed to do, and was successful in that line, and it worked out. As I would think that the way they expected it to, and I expect Zuri Invest to do the same.
Okay. Paul, let's get to your assets. My first question, actually, it's my observation. Your company has some pretty impressive assets. By that, I especially mean 3 fully licensed production facilities, Rosita, Kingsdom, and Alta Mesa. If someone would try to build this kind of facilities today, and correct me if I'm wrong, wouldn't that be a $1 billion investment or even maybe more?
It's hard to say exactly what that investment level would be. I would say $1 billion might be a bit high to get to those assets. But certainly getting the mineral properties to support those assets is key. So you can have the best plant built in the world, and if you don't have uranium to feed it, it doesn't do you any good. So I would say that to replace those assets, you're probably well over 250 million, approaching $500 million and then when you throw in all the mineral resources and the potential mineral resources, it's even bigger. So I have never done an exercise on what the replacement cost of all those assets would be. So I'd be kind of speculating as to what it would be, but it certainly would not be cheap.
Yeah, definitely would not be cheap. And that is very interesting since you're a company with market cap around 360 million US. So the valuation is pretty clear. Okay, let's go to your production plans and updates on your assets. If I remember correctly, you had a goal of 3 million, producing 3 million U3O8 annually by 2025. And from there, you had, if I remember correctly, 5 million until 2028, right? That was the goal.
That was the goal. That was kind of the goal, but in reality, it's that 3 million 3 years after we start production. So that would really put us more into 2026 and then ultimately 2028 for the 5 million pounds per year. Definitely the capacity is there. The one thing that's a goal for us for production. Obviously, we're not going to do it recklessly. In other words, we're going to make sure, we want to make sure that we're not going to be spending more money than we need to just to reach that goal if it doesn't make sense from a business perspective. But that's certainly what we built our strategy around and what we built our development plans around. So that's what our plans are right now. With the capacity, with the properties we have right now, we can meet that, but it's going to take that 3 and then 5 year window to make that happen.
So the quantity stays, but the time frame maybe moves a little.
Just to align with our start dates.
Okay. Can you give me a fresh update on South Texas production pipeline, Rosita, Alta Mesa, Kingsville, Dome, and other Texas assets? What are you currently doing over there?
So we got basically 3 parallel projects going on right now. So we've got the first well field at Rosita that's installed. We're getting Rosita into production through what we call our Rosita extension. It's a small part. It's a well field that was part of the old ore body that hadn't been mined out yet, and we're in the process of getting that into production by the third quarter of this year, before the end of the third quarter. And right now we're in the process of, we've got the plant is fully refurbished and ready to go. The well field is installed. Now we're installing all the surface infrastructure to connect that well field to the satellite plant. And we have a satellite ion exchange where we load up the resin in the field and transport it by truck to the plant where the uranium is removed from the resin. It cycles through it by truck. And so that we're getting those last pieces put together so we can we're looking for a startup pretty soon. I like to keep my windows open a little bit on the timing so that rather than get hard, fast dates, because anything can change. And so I don't want to commit and have to explain why we didn't make that date certain. So that's what's going on there. I'll get to Alta Mesa in a moment. Also, we have another project called Upper Spring Creek, which we're developing right now as a satellite to feed Rosita. And so that has substantial mineral resources. We're in the process of evaluating all those resources and getting something formal on them. But that will be the next feed. And right now we're in the process of permitting those properties associated with that project. And those are going with the TCEQ. They've advanced Texas Commission on Environmental Quality, and they're being advanced right now. But it's going to take a few months. So we're looking at that being a start of construction in the latter half of 2024, and then putting it in production in 2025 to feed Rosita to keep that plant operating at capacity. And it's going to be a ramp up. As you know, nothing happens overnight. We're not 800,000 pounds or 1 million pounds a year overnight. It takes time to build that up.
Of course.
So so shifting gears to Alta Mesa, we've already started putting in Wellfield there. We announced back in March that we made a commitment to take it to production, and we've set our target for startup of production in first quarter 2024. And we have 7 drill rigs out there operating right now, drilling, casing, putting in wells, casing them, and advancing the well field. At the same time, we're doing some work in the plant. It's been sitting idle for 10 years. And as you would expect in any environment where there's been an industrial process, there's always some decay or corrosion that we're addressing right now. But we expect that to be up, fully operational and ready to start up with the same time window we have for our production patterns in the well field. Now, Rosita, Alta Mesa is a different type of configuration than Rosita. It is not a satellite, a central plant and a satellite. All the well fields pipeline directly into the plant, into a central plant where our major ion exchange capacity is. And so we'll be ramping that up to get to that 2 million pound per year nameplate capacity on the drying side. That's going to take a little bit of time because we're starting, in 2024. So it's going to take several months to get ramped up to 1 million pounds per year, and then another year or so to get to 2 million pounds per year.
Yes. Same question for Dewey Burdock project in South Dakota. You have a PEA on this project. What is the status of this asset, and when do you expect the initial wellfield development and facility construction to start?
Well, right now we've got planned for start of construction in 2025. And it's currently licensed for 1 million pounds per year. The Dewey Burdock itself has been going through a lot of litigation because of its location relative to some Native American lands and the history of that area. But the NRC license, Nuclear Regulatory Commission license, was issued in 2012. It was appealed, and it went to the U.S. District Court of Washington D.C. District Court of Appeals, where the court ruled in the favor of the NRC. So, and the interveners, the tribe, chose not to advance it to the Supreme Court. So our NRC license is now final. Now we get to the other side of it. In order to do in situ recovery, we have to have permits to be able to inject water and recover the uranium. So those sit at the EPA, and there's 2 challenges there. Appealing on the same grounds as the NRC was appealed on, and the NRC was the lead agency. So we're going through an administrative process right now with EPA called the Environmental Appeals Board on the Class 3 injection permits. We expect that to get resolved relatively quickly or relatively soon, because the fact that the contentions are the same as the NRC that the court held up, and under the National Environmental Protection Act, the NRC was the lead agency. EPA was a consulting or cooperating agency. So the EPA relied on the NRC's process, which has already been proven up by the court. So everything has to go through its stages. And then we have some small state permits we have to get done, which the state has asked us to wait until the federal process is done. So that's why we've got that 2025 start of development and then 2026 start of production in our timeline, solely so we got enough time to get through those administrative and permitting steps, which we feel very confident will prevail on. But obviously, when you're in the hands of government processes, you're not in control of your schedule. They are in control of your schedule.
Yeah.
So we're trying to make sure we do that. So meanwhile, while we're doing that, we're ramping up Texas, getting that up to full production. And then Dewey Burdock, we hope to have right on the heels, basically piling into that production plant.
Got it. What about Wyoming Gas Hill project? You have also PEA for this project, and you have 7.7 million pounds of ISR pounds in the ground, and non-ISR 3.1. That's total around 10 million. What are your plans for going forward with this project, and give us an update on federal on the project?
Sure. So we've actually started the permitting, preparing the permits and developing the work for the permits for the Gas Hills project. It is Wyoming is an agreement state, so there's very little federal work that has to be done outside of what we call an AQUIFER exemption. But it's effectively a brownfields area. This is a historic mining district. There are open pits and other places around it. There's even a historic mill nearby. So the grades are good. We're going to be our intention is to do some core drilling within the next 12 months to do some core leaching to make sure that we've got capacity to leach. The work was done by Cameco for their Gas Hills property, literally on our fence line, but we wanted to make sure we do our proper due diligence on recoveries. But we've already started doing the permitting work. We have to do 1 year's worth of monitoring before we can put together an application. And we've started that monitoring this summer with wildlife and environmental sampling going on, wildlife studies and raptor studies, et cetera. That's all started now. And so, I think, and this is my personal opinion, is that Gas Hills could be a 2025 project, or it could be right in line at the same time as Dewey Burdock.
Can you also give me an update on Crownpoint project in New Mexico?
Well, Crownpoint is we own a significant portion of mineral assets. Crownpoint itself, the licensed facility is held by Laramide, and they're going through their process. They've got their license they're renewing, and then they're also doing their permitting right now on their state permits. And so we stand out. We believe that our Crownpoint project is one of the premier ISR projects. It's deeper. It's much deeper than, say, our South Texas projects or Dewey Burdock or Gas Hills. But it's been tested in the past with pilot projects, and it's definitely a producer, and it's a good grade, really good grades and good resources. And as Laramide moves closer to production, we have very good relationships with them. We'll look to see where there's a way we can operate with them, since they have the license at the moment, or they own the license out there. So that's still some work to be done. We also, in addition to doing the technical side, there's a softer side of New Mexico, and that has to do with the legacy of historic mining in the district. And so we're doing some outreach already to the local communities, trying to build a level of trust for enCore, but also for your in situ recovery, and trying to, and with the intent of not necessarily getting a complete buy-in or acceptance of it, but at least to where there's less fear of it and less misinformation that goes on about it, and become the primary contact for information regarding in situ recovery, rather than relying on non-governmental organizations which are anti-nuclear regardless.
Yeah. You recently sold a property adjacent to Crownpoint. It's Juan Tafoya Uranium project. You sold it to Anfield, right?
It's in the process of getting the closing, right?
Yeah.
So we've come to terms on an agreement. So it's the project we're selling to them is Juan Tafoya Marquez. Yeah. And it's important to make that name because they're two different leases, the Juan Tafoya lease and then the Marquez lease. Okay. They're literally adjacent to each other. The ore body goes between the two. The shaft, the initial mine shaft, is sitting on the Juan Tafoya property, but right on the edge to feed into Marquez. But it's the very first time those two units have been under one ownership. Before it was separate ownership and separate owners, and so it's the very first time those resources have been combined. And Juan Tafoya, for a conventional mining company, in my opinion, is a very good project. The resources are good. There's a lot of high quality drilling. There's a potential for upside there. There's even a potential that there may be some ISRable resources out there as well, and some of the redistributed portions of the ore body. But we're not a conventional mining company, and in order to get that produced, you need to have the asset, the conventional milling assets, and the expertise. And although we could probably do it on our own, it's better to have someone who's better set up for that, and allow us to focus our operations on in situ recovery, and we'll get the benefit of any positive improvements coming out of Tafoya, Marquez through our share depreciation of the price of the shares in Anfield.
Yeah, you will become around 20% shareholder in the company, and you will get, if I remember correctly, 5 million from that deal.
5 million Canadian cash,
Canadian.
And we'll have a board seat as long as we hold 10%, and the ability to claw back our ownership if there's a dilution event. So it's a good deal. It's a good deal
for both parties. Can you give me an update on your other non-core assets you have? What's the plan? Any spin-out, sale, or anything else with those properties? What's your plan?
Well, so we're working on several different angles, and I'll give credit to Bill Sheriff. He's our executive chairman, who's taken on the mantle of managing the non-core assets. Yeah. Using his network of connections and et cetera. So we're continuing to pursue. We've got other projects. If you go look at our website, you'll see there'll be a lot of properties in Utah, Arizona, New Mexico, not necessarily New Mexico, but Arizona, and that are not necessarily, I would say, core to where our development plans are. And they're assets for somebody who's looking for assets in the United States, quality assets in the United States. And so we're looking for those opportunities, and we're certainly making contacts and making the rounds, but it's definitely it's definitely an opportunity, and it does another thing for us. Is, we're focused on getting cash out of these, and any cash we get out of them goes right into treasury, so we don't have to go out and raise funds for that.
Yeah. You have 4 uranium sales agreement in place, but before we touch on that, can you explain to my viewers some terms and conditions of uranium sale agreement? We see that majority of signed recent sale agreements are based on marketing pricing with the floor price, and usually with inflation-adjusted ceiling price. Can you please expand a little bit more on that? I mean, what are the benefits for both sides in this kind of contract?
Yeah, well, it's a good, those are considered like hybrid contracts, but they're very good for both parties. Yeah. For one thing, the buyer, the purchaser, that's the utilities, needs some price certainty. They don't like having a situation where the uranium price, spot price, on a market-related contract could go accelerate and get out of control. For them, all we have to do is go back to 2007 to see how the market moves so fast. And that becomes a real cost center for them, and it makes it very difficult for them on their budget side. On our side, particularly until recently, when the price was hanging around $50 to $55 a pound for quite some time, the general consensus was, well, that's basically the pricing that one would get for a base escalator, maybe a little higher base escalator or fixed price contract. Well, that doesn't meet the numbers that I would like to see with respect to our sales. So we have I need, if I'm going to commit to a fixed price, it's certainly not going to be at a 55 or low, in that number, or even a little higher than that. It's going to be substantially higher, so that we have the ability to assure that our costs are going to be covered, but also we're not in this business to do it for free.
Of course.
We're doing it to make money and have a return for our shareholders. And so the pricing we need to get to a fixed price or base escalated contract terms is significantly higher than what the utilities can do right now. So by having a market related one, I take some market risk in between those price collars. I take the market risk. It could be higher or lower. As long as it doesn't go below the price collar, that allows me to cover my cost and a little bit, to stay in business. But the ceiling allows the utilities to control their upside on the cost. It becomes more predictable. So at worst case, they can always project to the ceiling price for their budgetary purposes. And then if we never reach that ceiling during that period of time, as long as it's above my floor price, which is also escalated, I'm able to get a good return on our uranium we're selling, and they're able to show a savings relative to the ceiling price. And so it's positive on both sides, but also it assures certainty on the collars for me on the low and them on the high side. And that's why we propose it. Now, obviously, if the prices are coming back from, utilities are willing to sell at a much higher price than we're seeing today, I would consider base escalator or fixed pricing, depending on the structure and the timing, because the farther out you go on a calendar, the years out, the more risk, you've got to have the prices need to be reflective of that risk, that price risk or cost risk. And so everything's a balancing act. And so that's why we like market pricing, because it gives us the ability to see upside, even though the price collar, the ceiling is there that caps it. It caps at a high enough level, which is at the level I would be willing to sign base escalated pricing at anyway. And so I feel really comfortable about that. And I'll say that from the agreements we've done, the three utilities, the terms have improved every time we've signed a contract. And that's because the market's changed significantly. If you go look at history, as we announced that the spot price is much lower than it is today. And also the cost of production was, expected to be much lower. As things move up, we've been able to reflect that in the new contracting.
Paul, you already answered the part of my next question that is regarding your 4 uranium sale agreements. How much total of uranium is covered with these 4 agreements? And since I presume you cannot talk about price per pound metric, can you comment in the terms of percentages? Is there a big difference in these 4 contracts between them, or are they approximately very similar already? But you already told me that most of them are higher than the previous one. Please expand on that.
Sure. So at the moment we have under contract right now, we have firm deliveries of 3.65 million pounds from 2023 to 2030. And then we have optional quantities. These are quantities that could be triggered anytime from 2025 through 2032 of another 1.65 million pounds. And those are assuming the buyer wants to call that option. And those options are all under the same terms. So of the 4 agreements, I talked about the 3 utility ones. We have one with UG USA, which is a subsidiary of Orano trading company. It was a legacy contract from from when we acquired Westwater's uranium assets that we had to renegotiate. And that is a quantity of 400,000 pounds per year for 5 years. And it's strictly market related, no collars, no price collars, and it's sold at a slight discount from the spot market. And so I would say of that 3.65 million pounds, we have firm deliveries. 2 million of that is through UG. The balance is through the utilities on firms. So roughly the firm commitments are 1.65. The utility agreements are 1.65 million pounds firm and 1.65 million pounds optional. I suspect they'll be exercising their options. But that is set up that way. And one might ask, why would you want contracts that are based on market pricing, even with a slight discount? Why is that important? Why don't you just sell into the spot market? The reason is that we're reflecting spot market pricing, but we have a firm commitment. If you've watched the spot market over the last several years, you'll see there are times when there's no volume at all, or sometimes there's huge volume or minimal volume, and the pricing can be somewhat opaque. And I also call it a bit occult because sometimes there's a bit of a mystery behind it. But it certainly shows some liquidity. But by having, even though by relying on a spot market, you're kind of dependent on when someone's in the market looking for material or not. Whereas by having contracts, even when we're selling at a spot price indicator, that we have an assured take. In other words, someone's buying that material. I have a dedicated buyer that's taking that material. So that's why I've taken that tact and strategy, because in my past experience when I worked for Mustang, there were times when you couldn't sell any uranium, and when you're in the middle of big price fluctuation, or just simply the month of August when a lot of the buyers are on holiday, it becomes difficult to move material. So by having some certainty built around it, that gives us upside flexibility. And that's what we want to make sure that everybody understands, that we're not committing 100% of our future production to contracts, but we're ensuring that we have enough committed to contracts to sustain our operations.
Fair enough. Paul, what is the cash position of the company at the moment, and for how long do you think that amount will get you through? I mean, when do you expect next raise?
Well, not counting the expected income from Anfield, we're sitting at around just under $10 million in cash and liquid assets. We have some revenue coming in from some sales of production coming up.
Yeah.
That'll add to that. That's not factored in that number. That number there is enough to get us to through the end of the year for production, and then and provide us the minimum to get there and meet our expectations. It doesn't give us much on the upside to do much more than that. But that coupled with the revenue we're expecting to get will carry us through the end of the year for sure, and possibly into the first part of the year. And my hope is that by that, we'll have Alta Mesa producing, and we got significant cash flow coming in through selling into our agreements.
Okay. Can you tell me how many shares of the company, if you know that data, is held by insiders, and how many shares do you hold personally?
I own, so I'll start with myself. I think I got a couple of different accounts. So I believe I have roughly 600,000 or 700,000 shares. I just bought some recently. But I have about that much. I had a lot more before we did our 3-to-1 consolidation, but insiders hold just under 5% at the moment. As you've been watching our trajectory with respect to some of our financings for acquisitions, that's what's kind of diluted it down some. Institutions hold about 20%, but that should be changing this week as the Russell 3000 does their buying, since we're still on their list of being added to the index. So that'll bring about more institutional buying. So I expect our institutional ownership to go up significantly over where it is today.
Okay, I know that the window for insiders to buy shares is very limited due to material information you did not release in the public. So my question is that window open now, and will you buy more shares soon?
Okay, so here's the trick. I can't tell you when I'm blacked out because it's disclosing material information, right?
Okay.
So I took advantage of the window I had. As soon as I became open, I did. I put quite a bit of my liquid cash into buying the shares, and I'm waiting for the next, when I get some more liquid cash, to purchase some more. I've got investments in various funds, my personal self, retirement and other things where I've got a certain amount of liquidity I can go and put into it. And if you knew me, you'd know that I have a tendency not to do a lot of trading. So I don't go sell a bunch of stuff to buy stuff. I wait till I accrue cash and then go out and buy. So I'm not a day trader or a trader in that fact. I buy what I like when I like what I'm buying.
Okay. I usually ask my guests that run exploration companies where do they see their company in 5 years. But for you, the question is, where do you see enCore in 10 years?
In 10 years, I expect us to be the dominant uranium producer in the United States, and a strong competitor in North America. The production plans we have right now, I believe we have a lot of upside with some of our exploration projects that we are not even counting as resources in our book. That could bring in a lot more potential resources to end the production. That 10-year window gives us that opportunity to convert those into production. And so I expect us to be one of the dominant producers in 2032. I expect us to be a dominant player in the North American uranium markets.
Okay. Do you see more M&As coming soon on the market?
Well, that's a good question. There are always opportunities for M&As. If you look, if we just talk about where our focus is in the United States and ISR, it's a very small pond at that point. Not a lot of players in it, and so the M&A may or may not occur within those players, or it may come from something completely different. But right now, we're not actively doing anything at the moment, but we're not going to miss opportunities that they arise. So M&A is continuously part of our strategy for growth and capacity. Remember, as I mentioned a few minutes ago about being the dominant producer in the U.S. There's ways you get there, or even in North America. And I can't right now at the moment today, I couldn't tell you exactly what steps we go through to get there. Because opportunities don't always come directly at you. Sometimes they come in from the side.
Okay. Non-related uranium question. In which other commodities Paul Goranson bullish?
I'm bullish in base metals, the copper. I think that with the electrification, I think copper is going to continue to be the story around the world. I spent a little time working for a base metals company back in the early 2000s, and back then when we were trying to live on 50-cent copper, and but copper's moved dramatically. But I just see it as going to be something that's being continuous demand. I think there's opportunities in the rare earth space. It's hard to tell where those opportunities are going to come in, solely because of the heavy influence the Chinese have in the markets. But as we look to more the overall markets trying to move to secure supply, Western supply, I think there's some opportunities there because, again, the rare earths are what creates these high quality magnets that we need for wind generation or for EVs or even hybrids. And those are still, I don't think they've been fully exploited yet. So I think there's opportunities for upside there. So I'm pretty bullish on, copper-based metals and rare earths, simply because I see that's where the whole economy is going, global economy is going.
Do you have any other metal commodities on your properties, like vanadium or?
So we have some properties in Utah that have vanadium on them.
Yeah.
And but those are conventional properties. In South Texas, we do have molybdenum, and with traces of rhenium in it. The molybdenum is always a challenge when it comes to uranium production, trying to get the uranium out of it. We've got some processes that we've developed, and as a result, we believe we can go in and look at monetizing the moly, but it's going to take a little work to get there because when we worked on it, when I was working a past life on it at Mustang Uranium, that's the private company I worked for back in the early 2000s. Yeah. The price of moly was $15 and it dropped to $2 a pound. At that point, it's a matter of where do you put your money, uranium or moly or both, and we put all our money into uranium at that point, shift back into uranium, simply because of the volatility of the moly market. That's changed now, where moly is much higher value now, and as a result, it is definitely something we're looking. It's on our radar screen to find a way to monetize. Even if we don't get it all, we get as much as we can. It's like finding money in a cushion.
Yeah. Paul, final question. How can investors reach out to you?
Best way to reach us is through our website, encoreuranium.com, www.encoreuranium.com. They can reach out directly to me at P. Goranson at encoreuranium.com. And I'll be willing to take any emails or whatever. And our general email is called info@encoreuranium.com.
Paul, thank you very much for this interview. It was my pleasure. I wish you luck with your company as well as your private life.
Thank you very much. Enjoyed it, and thank you for the interview.
Thank you.